welcome back to Jesse Invests. This is a full look at my $3,000 portfolio on M1. Go ahead and hit that like button down below, that sub button before we get into it. It helps out a lot. All right, let's get into it. We still have all the money we originally invested in the account, as well as a gain of $290, 76 of that, and $76 in dividends earned, for a rate of return of 23.45%. On M1, you divide your stocks into different sections called slices. Think like a pie, different slices. Well, I have 7 slices. I have 50% of the account in growth stocks. I've got 10% in restaurants, 11% there, 10% there, 10% there, 10% there, and right now just 4% in healthcare because I only have 1 stock in there. So the idea here is that I want to handpick my stocks, but I also want to keep it always around half the account in growth ETFs. So in case my handpicked stocks don't do too well, I at least have the whole market in the form of an ETF, helping boost the account up. So let's take a look at each section. So in the core section, growth, it is up 16% to date with $44 in dividends earned. And I own schd in here, $500 of VU in here, $100 of VYMI in here. And I have a 20% return on schd, a 2% return on VU, basically break even, 13% return on VYMI. So most of this, 90% of this growth section is in US funds, but then here we have 10% in international funds, just as a why not. So we're up 16% in the growth. And then in our restaurant section, we are up 36%. $5 of dividends earned from our restaurant stocks, which are 2 things here: Texas Roadhouse and McDonald's. Texas Roadhouse is up 56% to date. One of my best stocks in this whole portfolio. And then I'm up 16% in McDonald's. Still pretty good. Then if we go to financials, we are up 42% to date. That's the chart right there. I own 3 shares in here, 3 different companies: MasterCard, JP Chase, and Aflac. MasterCard and Aflac are both up 37% to date. JP Morgan is actually my top performing stock I own, which is up 68% to date. So again, a bunch of green, a bunch of good things. Then we have 10% of my portfolio in industrial stocks, which is up 18% to date. We have a 9% return from waste management, and then I own Caterpillar, which is up 18%. So that one's in a pretty good spot too. Then we have 10% of the account in grocery stocks, which is up 23% to date, this section. 42%, I'm up in Costco. I'm up 60% in Kroger. I am down 25% in Target. This is the first stock that I am actually down in, but because these are up so much, it still evens out to 23%. I'm up 23%. And then if we go to tech, I'm up 20% in this section. Tech is 10% of my portfolio. Microsoft I own, which is up 5%. Apple up 30%. SMH, which is a ETF full of semiconductor companies like Nvidia and AMD, things like that, they're up 24%. So 5, 29, and 24. Microsoft is almost break even. This is very interesting. Then, last but not least, this is a brand new sector that I bought into not even a week ago. I just started this healthcare section, which is down 11% to date, and is 4% of my portfolio. I own 1 company in healthcare section, which is Eli Lilly, LLY. Again, down 12%. I've only made 1 purchase of this stock, and it was earlier this week, and it's since sank since earlier this week. So totally normal to have a negative return. So again, let's break down the holdings, a quick glimpse. We can see here all of my holdings: schd, VU, Caterpillar, Texas Roadhouse, Vanguard International Fund, MasterCard, McDonald's, Waste Management, Costco, Kroger, Microsoft, Apple, JP Morgan, SMH, Target, Aflac, and Eli Lilly. And my best performers are, drumroll please, JP Morgan Chase is my best performer, up 57% since I bought in. Most of these I bought in about 2 years ago. Kroger is up 44%. It's second place in the run for my best performer. Texas Roadhouse in third, up 32, and then honorable mentions from MasterCard and Aflac. Now the worst performers, we already kind of got into that, but Target and Eli Lilly, with VU and Microsoft at break-even points. Overall, tons of green, which is really nice to see, which is usually to be expected with dollar cost averaging for a consistent amount of time. So those are my holdings, 17 positions, with I believe 4 of them are ETFs, so 13 individual stocks. I want to keep it under 20. I ideally do not want to add a single more position to this. If I did add one more position, it would probably be healthcare, because healthcare section is the only section of my account that has only one company. So a second company could kind of even out things, but I am not planning to rush into that. I am one to spend a long time thinking about which stocks I want to buy, analyzing them for a while before I pull that trigger. So 17 stocks is pretty good. I want to allow these to grow. Yeah. So that's my portfolio as a whole, guys. I can end the video right here, but I know you guys want some juicy little details that I'm going to include as well, that I'm going to jump into here. So I have multiple portfolios. I have multiple avenues that I invest in. So those are all on my investment returns visualizer. This portfolio sheet, I also have a spreadsheet in the description for you guys to access, which is a template of this if you want to compare different accounts of yours. But this shows the compounding annual rate of return for each of my portfolios. So we can see that as of April 1st, 2025, and this video is March 15th, so these are as of today, actually. We can see here that this portfolio that I just explained to you guys, the M1 Dividends portfolio, is the second best performer right now. It's the blue line right here, under just gold. Last month, it was actually in first place, but due to some market conditions, everything has been falling here a little bit, except for gold. When the market falls, gold usually rises. So gold went from second to top. So out of all of these, gold is giving me the best return. M1 Dividends has decreased, so it's now in second place with its return. S&P 500, this is just a benchmark. I don't actually own VU by itself. Like the S&P 500 is in third place. My M1 Dividends account does have a greater return than VU. It didn't always, but it does now. Roth IRA, the Roth IRA is here at the bottom, kind of tied with Bitcoin for rate of return. So that's an interesting little metric there. We also look at my monthly dividend income for the M1 account. We can see that in January I earned 48 cents. In February I earned $1.08. March is not complete yet, so we don't know that amount. But we can see that last March it was $8, and we ended last year with a $56 in dividends, or $4.73 a month in dividends from M1 dividend account alone. So I'm excited to see if we pass this. I really hope that we can get to about 120 this year, like double that in annual dividends. That would be really awesome to see. And then we're going to look at this is another way of seeing the companies I own. We can take a look at like their yield on cost, which is a kind of a cool metric to see. If we go to current yield, VYMI and Target have a dividend yield right now of 4.38% and 4.28%. So investing in these two tickers is going to pay me the most right now. And if we go to yield on cost, VYMI, even though it's a 4.38% dividend yield, because I bought in at a lower price, what I own is paying me 4.74%, which is really cool. Same thing for schd, it's paying me 4%, even though the yield is only 3.6. You can also have the opposite effect though if what you own is in the negative. So Target is paying a yield of 4.28%, but I bought at a higher cost, so I'm not earning as much dividends. I'm only earning 3.5% dividends. So that's one way to look at it too. And that's about it, guys. So go ahead and hit that like button down below, that sub button, if you want to get that weekly content from me. Every Sunday at around noon, I upload. Been doing that consistently here for a couple months and plan to keep going. So yeah, thanks for tuning in. If you like this portfolio, you want to stay updated, I actually have the next update video coming out in 2 weeks. Every month I make an update video on this portfolio. I've got a couple series I do, keeping track of different portfolios. So this is a great point to jump in. If you like what you see, go ahead and stay tuned, and we'll see how everything changes in the next couple weeks. So yeah, thank you guys so much for watching, and have a great day. If you have any feedback, leave it in the comments. See you guys.